Yo, what's going on? It's your boy Chike Investing back with another YouTube video, back with another episode. We're going to be talking about something very interesting today. So, first of all, before I get into what that topic is, if you're wondering what this is, I have a special topic for today, but we do daily NQ and ES reviews here on this channel. Very soon, I'm going to start going live daily, where you can see these trades getting executed on a live basis. So make sure you subscribe and stick around. I also post these videos daily, so make sure you subscribe. Thank you for subscribing. I actually really appreciate it. You know, you're a good person for that. And thank you for pressing that notification bell too, so you don't miss a single video. I wouldn't want to miss one either. And also, you can press that like button because you're a good person and you're already on a roll. You've already subscribed, so might as well press the like button. So, thank you. Appreciate it. Now, we're going to be discussing how to trade Quirky Fridays. Now, what is a Quirky Friday? That's a very interesting term, right? So, we trade ICT concepts here. This is the 22 model channel, right? We trade ICT 22 model channel. I'll go over what that strategy is as well, and the multiple times they formed today and how you could have made lots of money today, even on a Quirky Friday. We're gonna go over what is a Quirky Friday, right? But I'll talk a little bit more about that as we get into lower time frames, because if I say it now, you're not going to really understand it. Let's just go over, what's happening right now and what happened today on NQ so far. We'll go from the daily down to the 1 minute, and I'll try to be brief. I won't make this too long, and we'll go over what happened on higher time frame, go over daily bias, talk about what a Quirky Friday is, how you could have anticipated it today, and what were the moves that are happening today on the 1 minute. Let's go. All right. So on the daily, right? On the daily candle. So you can see that we had an inside in. We did not take out the previous day. We did not take out the previous high, previous day high or previous day low. Now let's think about where are we right now, right? In on this index in NQ, right? Where are we sitting? Same thing in ES. Where are we sitting right now? We are sitting in these daily fair value gaps, right? So this is very characteristic. When we are sitting in these daily fair value gaps, a lot of times you can see very high resistance conditions, right? Price is not just moving as liquid and smooth as you would like to your, to your TPs, right? You're trying to get those 1 to 3s, and price gets to like a 1 to 1.5 R, and it just comes back to your break even multiple times a day, right? You're hitting BE, or if you're not as experienced, you're just taking loss after loss, right? Because you don't know how to navigate with risk to reward in these kind of environments, because you don't know when to set to BE and not. Like, these are the environments where trading is going to be the most difficult, right? Look at how price is just multiple days has failed to really expand anywhere, like versus a day like this, or 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 a day like this, where price action is just way cleaner, way easier to anticipate, nice to catch good trades. If you're not experienced, it can be very difficult to trade in these conditions, right? So what does this mean? Trade with half risk. Don't go full risk while we're in these higher time frame, civvies. I'll show you why, and how you could see this, but this is what happened. We didn't have enough volatility on a Friday to get to the previous day high or low on NQ. We did on ES though. ES did hit the previous day high. ES did hit its previous day high, and actually right out the gate, ES was bullish, and that makes sense, right? ES has always been more bullish than NQ for the whole of this year. Like, this all-time high over here was reached on ES a long time ago, right? ES has been bullish for a while now, and so that's why you can see longs are working out really well on ES, and shorts are working really well on NQ, because NQ is a little bit more bearish than ES, okay, or just not as strong. It's a little weaker. That's the word I'm looking for, actually. All right, so that's it on the daily. We closed above the consequent encroachment here, but we don't know if this is going to be short lived or if we're going to reverse going into next week. If we do expand higher, I do expect this to come and fill this daily civvy right here, because we've already filled it on ES. It'll be reasonable to expect that NQ could do the same thing. Okay. Or if we come in on Monday and we open bearish, I mean, we could see ourselves rejecting away. All right. On the 4 hour, what do we have? Let me bring these down so it's not distracting. Okay. So we also have one more right here. Visibility. Okay. So what do we have on the 4 hour? What are the relevant PDRAs? So you can see this is the daily Civi constant encroachment right here. You can see that coming into the AM, right? So overnight didn't move too much, but coming into the AM, right? We found some support on the low of this daily Civi, and we're going higher. What also do we have? We have this RDRB, redelivered rebalance price range, where you have a wick and a bodies candle next to it. From this open right here to this candle's low, that is the RDRB, redelivered rebalance price range. If you don't know what that is, search it up on YouTube. There's lots of videos on this. This is a PDRA and ICT matrix, right? You can see prices hovering in the upper half of that. That's why when I came in the morning, I was anticipating bullish pricing. I actually remember seeing Tanya trades, in the morning, and she was having a bearish bias because we had hit a lot of buy side targets, and there was like a lot of liquidity below here, and we're in the closing in the lower half of this daily Civi. But to me, ES had already dug higher into this daily Civi above, and NQ was respecting the upper half of this 4-hour rebalance price range. So I actually had bullish bullish sights for the rest of the day, and I ended up being right there. That's just what it is. I'm not saying one trader is more advanced than the other. Just calling out for what it is. I did get the bias right today. I typically have a very, very strong sense of bias. I think some of my weaknesses is probably a little bit more on the discipline of executions, but we'll go over that a little later, where maybe some of hers, maybe vice versa. But you can see we came back and tapped this 4-hour basically that we have been interacting with for a while this week. We tapped that in the London session, and then going into AM, we expanded higher. Did have a wick lower, but couldn't close below this bullish order block. Still respecting it, even though we closed below, which is why when you see heat coming like this in the 4-hour, you got to be mindful. Don't say to yourself, "Oh, or could we bearish now?" Like you got to be like, "Okay, well, it depends on how we close. If we close above the mean threshold of this, we're still bullish." So price continues to go higher, and you can see we're actually staying above this daily Civi consequent encroachment. We closed above it in the AM, and then we stayed closing still above this daily Civi. So we're actually bullish still all day. That should be the bias, right? Plus, we've not hit the previous day high yet. We never got there because NQ is just too weak. But that has been something that we saw today on the 4-hour. I still want to see this high get taken out at some point, which is actually the previous day high. So maybe that can happen next week or so. So what do we have here on the 1-hour? You can see that we consolidated overnight. We did during London take out the lows, these equal lows right here. It's relatively equal lows, and this is a 1-hour inversion fair value gap from yesterday. That price came back in and was respecting, closing in that this morning. That's the only reason why I have that open, because you can see that price is actually still respecting that level, and we took out these relatively equal lows, and then broke market structure higher by closing over this 1-hour Civi. So coming into the pre-market session and 9:30 open, I saw that London high and Asian high, as well as yesterday's PM high, had all still been intact, but we took out all this liquidity below here. So to me, especially for having if we're reacting off discount pricing in a bullish fashion, or discount PDRAs in a bullish way, such as here, right? It's very easy for me to see that these highs get taken out, right? And we actually ended up doing that on ES very quickly in the morning. We took out the previous day high, the PM session high, and this is the PM session high yesterday, which was the previous day high, as well as Asia and London. We took that out in pretty much one swing. We couldn't do that in NQ. What does that mean? That means, if you anticipate that ES is more bullish, you should be if you're looking for longs, you should be trading ES. That's why you can flip over and look for your entry model on ES. And, we do the ICT22 model. I'll be going over what that is later in this video, but make sure you just stick around. But we need to understand what's happening on higher time frames to inform and make sense of what's going on in lower time frames. If you just go in lower time frames and you're just like taking executions, you're going blind, okay? Because price can just rip back on you. So you want to understand where's your bias, right? That's where your most profitable and long-term trades are going to be. So price ends up breaking market structure. We take out London and Asian highs. We couldn't take out the yesterday PM session high just yet, all the way until the PM session. And so we kind of just consolidate back and forth, until about lunchtime, where we did close above this 1-hour BISI, right, and finding support on it, right? You pull that all the way through, cutting through candles. You see price is still closing on the top of that, and going higher, right? So we're still showing that we're respecting bullish pricing. Plus, you're closing on the upper half of this bullish order block as well, right? So price is still showing upwards pricing. So a lot of your longs would play out better today than your shorts. That's all the things I mentioned so far. So this is where we start to get into quirky Fridays. Like a lot of times on Fridays, if there are certain conditions, you can see price action like this. Like this is just utter garbage, right? Look at this. This is just utter garbage. Utter garbage. Like 15-minute back and forth, back and forth, back and forth. High resistance trading. And that can typically happen when you are in higher time frame PD arrays like this daily sibby. When you are stuck in that and it's hard for you to expand past it, unlike ES did, but NQ has been showing a willingness to not expand past it all week. On Fridays, a lot of times you can see the liquidity drop off or just become really, really high resistance, especially if we've hit all the targets, really quickly, or majority of the targets really quickly. We're not showing willingness to continue. Like you can just see price start to fall off in precision and just become a lot more difficult to catch. And you'll notice you'll enter a trade, you're waiting for it to get to your take profit, but then it'll just come back on you at BE because we're just going back and forth. No matter what bias you had, if you wanted to take out this low, right, we start heading towards there, but price starts shooting higher. If you want to take out this high, price doesn't get there, it comes back lower, right? If you want to take out this low, price doesn't get there, it goes higher. Like finally, we got to the PM session. The reason why we got to this PM high is because of what I mentioned before. On higher time frames, we're bullish. So a lot of your best trades would have been getting longs, right? Along here, along here, along here, right? Even along here. Like these are where you're going to get a lot of trades because at the end of the day, especially on days like this, on quirky Fridays and on any high resistance, trading conditions, you want to be focused on where is price gravitating towards and why. And that could be from higher time frame PD areas being respected or higher time frame market structure to where liquidity is sitting and where, where has ES moved, right? And do we expect NQ to move that same way? Those are the things that you need to be keeping in mind. Okay, so what happened on the 15-minute? 15-minute, we took out the Asian high. Price came back in. We stopped at this 1 hour busy, closing below that. Price went higher, right? Skyrocketing, touching this bearish order block. Came back down into this BISI around 11 a.m. But then just continued to come back to this 1 hour. Found some support on it, went higher, right? Came back into this, we did have a small retracement at 12:30, right? Touching the constant encroachment of this 1 hour BISI and then going higher, taking out the PM session high at 1 p.m. and then kind of consolidating basically until about the 4 o'clock time. Where we did go slightly higher and coming back into this 4 hour SIBI. I do expect this to take out this previous day high at some point, right? Okay, that's the 15-minute. On the 5-minute, let's talk about the 5-minute. So on the 5-minute, again, we still had the London Asian high coming into the 9:30 open. So also, we took out this low, right, over here. This low right here took out this low. It's very hard to see. But this low right here took out this low. So to me, what is an easier, low-hanging fruit to target? These relative equal highs here, these relative equal highs right here, as well as ultimately up here, right? This area now has become jagged. Yes, there's like some low-hanging fruit right here, but these are London and Asian highs, right? London and Asian lows had already been taken out. London and Asian highs are like London Asian highs and lows when they've not been taken out are very easy places for price to gravitate to. So that's a lot of times where I can get my initial bias, right? So we end up going and take that out right at the 9:30 opening, filling in this opening range gap. But then we failed to displace and close above the highs. You can see that we came back and wicked lower. That's how I knew the price action was not going to deliver how I wanted it to. So price, did consolidate for a while, ended up coming back down and taking out these relatively equal lows right here. And I believe if you actually check RTH, no, I was looking for these lows to get taken out on RTH if we could go lower, but because of the Quirky Friday, we couldn't have enough displacement to get there. Price ends up taking out these relative equal lows, takes out this low as well, and then revisits the daily CB low, goes higher, forming a big fair value gap, reacts off the Asian and London highs and the constant encroachment level, where we're kind of consolidating for a while, comes back down to this 1 hour BISI, hovers in the upper half, goes higher, spends some time around this opening range gap, plus this 1 hour BISI, and then takes out this low, goes higher, comes back into this fair value gap, and takes out the PM session high. I did take that trade today, actually. It was a very, very, small R to R trade. I mean, you want to take R to R trades like this when you have very trash conditions. You're not expecting price to to go anywhere. If you really feel very heavily convicted about where price is going to go, like this PM session high, I was pretty convinced we were going to go there because ES took it out as well, and it's just very low hanging fruit. We're in a very good position. We had a very good 22 model breakout out there to get it. You know, I was very confident we're going to get there. So I'll show you guys what the 22 model is at this point. 22 model, high, low, higher high, break of market structure. Fair value gap needs to be present. Returns back down to a PD array, goes higher. And ideally, that PD array is going to be the fair value gap. And then we go higher. On the left side, you could see us downtrending, right? We hit a key PD array, take out this liquidity right here, break market structure and go higher. Or we're on an upwards trend. Price takes out some short-term liquidity right here, breaks market structure higher again, and continues going to where your bias is. Now, the 22 model, we'll go over what that, and if that was really fast, I have a video at the end of this video that goes over this very slowly and in depth, but I'll show you guys some examples. So look at this low right here. It's taken out by this low. That's the purge liquidity. Reacting from the PD array, cuts in the coaching of the 1 hour BSC, plus this opening range gap. Goes higher, forms this fair value gap right here, returns back to that fair value gap after breaking market structure. So all three things have now been fulfilled, and we have a bias. We have a target. The most important thing, you cannot take a 22 model if there is no bias on where you want price to go. That is pointless. That is gambling, okay? So it gets to PM. Once you get there, I'm out of my trade. Quick one to 1.5R. Price then you see starts breaking off. Plus this is a 4-hour SIBI, right? This is a 4-hour SIBI that is here. Very, very strong level that price has been failing to get through all week. So I'm not anticipating that on a Friday with trash price action that we're all of a sudden just going to take that 4-hour SIBI out. We don't, right? So that's when I get out. Price retraces and takes out this lunch low. I believe this is the real lunch. Oh yeah, we end up taking out the lunch low, right? So that could have been your target if there was a nice 22 model on the way down, right? Price finds some support on midnight open, goes higher, takes out a short-term low, basically gyrates for the rest of the PM session, right? So that's it on the 5-minute. Let's check the 1-minute. Well, let's check on 5-minute. When did it hit that PM session high? 110. When did this form? This formed during the 1250 macro. So this was also a macro as well. So the 1250 to 110 macro. That is a, you know, the last 10 minutes and the first 10 minutes of every hour. A lot of times you can find some really good trades there. That's when the new hourly candle is forming. You see a lot of volatility. And so those are really good times where you can trust the 22 model that is forming at that time. On the 1-minute. So I was looking for longs because we had that London Asian high, right? So once 930 opened up, where was that? Right on this candle. Once 930 opened up, I saw this low, this high, and this low. I was hoping that there was going to be a break of market structure here and a fair value gap. There was a fair value gap right here, a very small one. Very small fair value gap right here. Price came back to it and went higher. But that's not an ideal 22 model because we have this wick. Like, it's just not clean, right? Like, I don't want that. That's like too unclean for me. Plus, price is just going back and forth. We took out this London high. Like, what if we went lower and took out these LRRs? I didn't feel comfortable about that. Even though you had this breaker in place, just not really clean price action. Price ends up going higher, and look on ES like how much higher that like price just went like in the morning. Like if we got a nice 22 model here, like I would have definitely taken it. Like price just starts skyrocketing. Previous day high here, London Asian highs right here. Took those out. Anyway, let's focus. So we ended up taking out those key levels, right? Just came short of this 4-hour SIBI right here, and then came down here, and on ES. Because we had taken out all those key levels, I actually took a 22 model short, but because NQ had not hidden its levels higher yet, and the 4-hour was actually bullish. The 4-hour and 1-hour were bullish, right? So it's times like this when you see a very juicy 22 model. Like, look at this, like this high and this high, break of market structure lower, fair value gap right here, price comes back into it. That's a 22 model right there. But my bias is bullish. Look at the 1-hour and the 4-hour we went over before. Like, I should not be chasing any longs right now. There's not enough. I mean, there's these relatively equal lows right here. In an ideal world, I would have loved to see an expansion lower, but MQ had not taken out its levels yet. Yes, there's SMT. So honestly, like I think it's very 50-50. My bias was bullish, and we hit all those levels on ES. MQ we had not. And I'm kind of debating myself now. You know, this is also like why risk managers are very important. We had these relatively, I mean, these equal lows look really nice. I mean, to be very honest. So honestly, like in a perfect world, this really should have worked, especially with the SMT with NQ. And you can see we eventually come back down there, but we just can't take these levels out. So, I mean, you see the precision of today just really falling off. I mean, it's the quirky Friday because we're in this daily civvy. Like, this is what makes this, like, these kind of trading conditions hard. Like, it's just, if it's just better to not even trade on days like this. Like, when you see we're stuck in this daily civvy, it's a Friday. Like, a lot of times, like, this can happen, or you get these quirky Fridays where things should happen. Like, we should have really gotten acceleration down to these equal lows, especially with that SMT with NQ not hitting these highs, but we did it. Price ends up going higher, respecting these series of fair value gaps right here. It doesn't take out this high, so some people place their 22 model, entries. They place their stop loss above this high, right? I would have set mine above the breaker right here, above this breaker. But honestly, in a day where there's high resistance, it's probably more beneficial to put it on top of the high because price can actually reverse pretty aggressively. But it'll still end up going in your direction if your bias is right, heading towards this equal low. So you can see how at least we take out this low right here, and these pair of equal lows right here get taken out by this candle. So I was ultimately right. These equal lows did get taken out. We just had a deeper retracement than I would have liked. So I think a learning lesson for me is to be more flexible on where I'm going to place my stop loss, because look, we didn't even break this high right here, the high of this candle. So I could have even set my stop loss right there as well. Price starts breaking down. We'll go back to NQ because NQ is the primary one we trade. I just use ES if I see a really good setup. See, a similar thing happened on NQ. We did end up taking out all these relatively equal lows on NQ, coming there eventually, but we didn't get a nice 22 model. If we had taken out this short-term high right here and broke market structure, I would have short here and then taken and gotten out below here. I would have done that, but we did not take out this high right here, unfortunately. We left equal highs, which eventually get taken out in the PM session. Eventually get taken out in the PM session, as you can see. And then we make the low around 1028. So this low forms around 1010. Get another one at 1022, taking out this, but then price goes higher. And at this point, I actually entered a 5-minute short. Let's actually go over that because I do remember taking that. So right here, we had this breaker, right? This breaker candle right here. Price broke market structure, and we had this 5-minute fair value gap. I got in at the low of this breaker. My stop was at above the breaker. You can see we start to break down, and we take out this low. But then immediately we come back in the range, finding support in this 1 hour CB, closing in it. So you want to be paying attention. Like when you're seeing things like this and you're seeing price not wanting to continue to expand, but it's reversing higher, and you're respecting a 1 hour fair value gap like this, like you should already anticipate that today is just gonna be a trash day. Like we should have fallen and taken out these levels right here after taking out so many levels of liquidity and having SMT. But you see things like that starting to form where price action is not doing what it's supposed to. Go ahead, close your chart. It's a Friday. We're in a daily SIBI. Like all those market contacts is very important to keep in mind. Let's go in the 1 minute. Price does break market structure higher. It does form a 22 model right here with this low high. Breaking market structure. Comes into this fair value gap, goes higher. But you see we consolidate. You would have set your stop loss to break even once we've expanded away. It should not come back down. It ends up retracing so deep. So like that's why you set your stop loss to break even once you've expanded away. The best 22 models just expand. Like they don't come back to your entry. Price ends up falling back down to this 1 hour busy. We go higher. We do form like a 22 model right here, but look at the time of day. It's 11:30 on a trash day. Just I wouldn't be taking that. We do get an expansion away. Back to the daily CIBI consequent encroachment. Come back down and touch this opening range gap. Consequent encroachment in the 1 hour CIBI. Around 12:40. Go higher. Breaking market structure above this high. This low, this high. Breaking market structure. That's an entry. So I did take that. You can see price comes back into this breaker plus this fair value gap. Your stop loss will be below the breaker. You can aim for that PM session high. That's a solid trade. W right there. Price consolidates for a while after taking out the third leg of liquidity, and NQ is already weak. Price starts breaking down. We do form this 22 model right here. High, low, higher high. Breaking market structure, fair value gap starts presenting here, right? But we took out this low. and this low. So on a day like this, I'm anticipating that, especially in a PM session, after we've moved so much in the AM session, that like once you hit the first or second leg of liquidity, like price is just going to come back up, right? And I think I actually took this on I think I got in a little earlier. Can't remember. Maybe it was a 2-minute. Yeah, it was. Yeah. So, oh well, I didn't take this. There was no fair value gap that was there, but I did take this one. Price took out this high right here. We had these LRRs, and we're reacting from this 4-hour CIBI. That's the key thing. Low, high, lower, low. Because this fair value gap, price goes lower. And then once it moved away, semi stop the loss break even, we come back up, price starts to expand away. Why does this not go in my favor? And why do we end up going higher? Because at the end of the day, the 4-hour was always bullish, right? So you want to keep in mind what's going on higher time frames. So price, as you can see, all day is basically going up, but it was very choppy and high resistance to get there because it's a Quirky Friday daily CIBI that we're in. And yeah, that's pretty much it. We do end up making, another high around 4 p.m., but it wasn't the high of the day. We didn't take out the high of the day. We kind of just chopped around all day, really much. It's pretty terrible price action day. But that is it for now. Thank you for watching. Make sure you press the subscribe button, press the notification bell, and make sure you leave a comment below. And also join my free Discord so you can hear these things happening live and get my bias. So if you're wondering where price is likely to go to, I can help you out with that. All right. See you guys next video.